pressure. Every scar, every hit only made me better.
Okay, good afternoon, everyone. This is Demetrius with Akeelah and Akeelah Traders. And so today is July 8th. Today is July 8th, 2026. And it is about 2:30, almost 2:30 p.m. Eastern Time. And so in today's analysis, we're going to take a look at a couple of different assets to kind of break down. So the goal here today, we're going to continue to talk about our Akeelah Market Makers strategy, how we approach the markets, what our mindset is, and being able to look at markets, identify high probability trade opportunities in the market. So today we're going to start with the NASDAQ. So we did a post about 2 weeks ago on the NASDAQ. If you get a chance, please go back and watch that video. We reviewed NASDAQ and a couple of different other assets. And so I'm going to jump in here into TradingView today and go to a post. If you're not following us on TradingView, please do so. Our channel is Akeelah Traders on TradingView. And when you go into there, let me go back to this. Well, I'll just start with the NASDAQ. And so this is the post we did in NASDAQ on June 30th. Our outlook right then was a short. And why was that? Because we're going to look at the daily and the weekly time frame. So in the weekly time frame here, we made note that we had a weekly break of structure. A daily break of structure. I'm looking at the weekly time frame, but we'd had a daily break of structure. And when we typically see a break of structure, the opportunity that we look for is to see if the market is going to pull back and retest that. We want to identify what we call the source for that. And in this case, the market at that time, as of June 30th, had a daily break of structure and a pullback to that supply source. So our mindset of the way we approach the markets from our market maker strategy is we want to identify where is the target zone for that. And so at that time, this was daily break of structure down and return to the source. The target is the daily demand zone. The daily demand zone in this case is around 28,575. And so this demand zone, this is this area right in here. We're saying once we see that break, that this demand zone is what really has to hold. And so if the daily demand zone, this is the one that got broken, if this doesn't hold, the target for this drop is either going to be the fair value gap or the daily demand source. And the source for this is down. There's two target areas. There's a big fair value gap on the daily here between 26, just say 26.3 and 26.9. Then a little further down, let me zoom this up a little bit. The daily demand source that the market would be hunting at that time is going to be down here at 23,750 to 24,580. It's a pretty big range there. But this is where the NASDAQ is heading. So as of right now, what is preventing us from falling there is this daily demand zone. So let's go to the live chart for NASDAQ and look at it on the daily. And you'll see what's going on from here. And this gives you a better look at when and how we set up this trade here. And so this is the daily break of structure that happened. This was on between June 10th and June 11th. So the market told us and signaled to us that this large push up, which this has been a run ever since the end of March, first part of April, the NASDAQ has pushed hard and made this long, rise. We went from basically say 23,000 all the way up to 30,700. That's a huge push in the markets. Great for the markets and those who are buying, but it creates a lot of imbalances that the market is just not satisfied with. So when we see this break of structure, this is the structural break here. The supply source is this area that's marked up here. So at this time, once we saw this as of June 11th, this is when we were able to set up this opportunity. And so the market did push back up into this area. And what I want to point out, note how we did not have a break above this supply source. We had wicks that pushed up that way to try to get above it, but did not have a break above it. But most importantly, we did not have a close. So a daily candle never came up here and closed back above that. If it had, that would have invalidated our trade setup and we would look at something different. And so until that happens, this structural support is still in place. So the NASDAQ is still going to fall. And the only thing that's keeping it from falling now is this daily demand zone, but it's already been broken. So the market makers, large institutions, hundreds of billions of dollars that are moving the market, have already told us with pretty good confidence that the NASDAQ is ready for a reset or at least a rebalance. Okay, so these are our target areas down here. Let's we'll keep watching it, and you'll see things like today, currently right now at what, 29, almost 29,200. So the market is showing panic here, but notice how this zone here, the bulls are fighting to keep the NASDAQ above 28,600. It doesn't look like it's going to hold, and so with that structural break, look for these big areas, target down here and here. All right, let's go to the next one that I want to look at is Broadcom. And Broadcom, again, if you want to follow us on TradingView, this is a look that we've had on Broadcom. So we've been following Broadcom for the last couple of months. If you go back again to a previous post I did in June, we talked about how we followed Broadcom all the way from this 480 area. This was a signal. The market was flashing on the 4-hour time frame, and maybe some indication on the daily, but definitely this was prior to earnings, that this thing is exhausted. It's way overextended, and it's time for a substantial pullback. So we've been following Broadcom up from the 460 to 480 area, signaling that it's time to get out. And the target areas that we've been focusing on are these areas down in here. So there was, again, a pretty large fair value gap down in this area, with around 357 to 362. And this is where we are now. So we followed this area down. This was a fear collapse area zone that we had marked at around 345 or so. So if the market had not held, if it doesn't hold this zone area, 357 to 362, that's a larger, much larger issue for Broadcom. And so you can take a look at that. Again, Akeelah Traders is the channel on TradingView, and kind of get a little more insight as to how we dive into that, and why we're seeing what we're seeing now. But let's go to the live chart on Broadcom, and this has a little more details of what we've been signaling in these target areas. So once we signaled this, hey, it's time to get out, the first target entry area was between this 380 to 390. This was to see if the overall bullish structure was going to stay strongly bullish, or if it was going to signal for a bigger rebalance. And so that was the first target entry area. The second one was exactly where the market did fall down to, this 357 to 362. So if you'll notice here, this is the daily chart that I'm looking at. We did come down, and look how this zone held very well. So from 460 to 480, all the way down to 350, 360, that's a huge pullback. But this is holding, and you'll see we're getting a pretty significant bounce up out of here. For the time being, these areas, this overall structure is still in place, and these are still potential danger zones down here a little bit further. The source of all of this for Broadcom is still sitting right at $300, 290 to 297. So that's not completely out of the woods yet. So what has to happen from this point, we've seen this big bounce. This is where we entered buys again, started getting back in, scaled in at this 380 area, got back in more at this 360-ish area. And you see the market is giving us a pretty healthy bounce, showing that this is a true demand zone. Bulls are active in this area, and it's a lot of volume. But we still are not out of this supply source area. This is the zone that caused the structural break to start with. So in order for this to continue bullish, we need to come back up on the daily and get a close, at least on the 4-hour first, but more conclusively, I should say, on the daily, we need to close back above 407.80, 407.50, something like that. So as of right now, I would expect to see this kind of push, maybe expect the market to play a little bit, consolidate in this area, and then give us a strong signal as to whether it wants to push back out or not. So that's the Broadcom analysis, but the entries, bullish entries that we made down in this area are already up pretty good now, from 360 up to 390. So that's a pretty substantial push, all based on structure. So if you notice what we're doing here, we're just following a system that allows us to identify where these high probability zones are. And if the market is signaling sell, then we get out. Either get out of the buy or take a short, take a put if you're doing options or those kinds of things, and so get out of the market. All right, so that's another update on Broadcom. Again, go back to the previous video and you can see how we spoke about that sooner. The next one I want to look at is NVIDIA. So this is back on May 21st on TradingView. We did a post called, I call it Dip That Chip. You know, NVIDIA had great earnings. So why is it down? Why is NVIDIA falling after having huge earnings? It had a high of almost 240, I think 236 or something like that. And this was right after earnings, but the market was already signaling to us that there was problems. And so in this one, we kind of break down and analyze, well, why is that? Why is this structure, signaling a problem? And why, even though many analysts are saying that, NVIDIA's poised to go to 270, 280, 300 or so, 350, why is that not going to happen? At least not now. And so we're trying to identify, yes, is NVIDIA long-term probably going to get there? Of course. But right now, it's not. So the areas that we identified there, we've seen this same kind of structure that I mentioned on that we saw on the NASDAQ. This demand zone had to hold. This H4 demand zone must hold, or we are dropping down to the daily area, which is around 200 to 195. So if we fast forward this one, you can see, this is pretty much, almost exactly what NVIDIA has done. So we've come all the way down, look like we got a low of 189. So this area was where we were targeting. And because this is a daily area, then this daily zone needs to hold. Now, this is not a good signal that we actually close below that. So what the market is doing now is trying to fight to get back above. Today's candle is currently right at 202. So if we get a daily close back above here, then we can negate this structural break. But as of right now, this is a daily break of structure, which is a much, much, much bigger issue for NVIDIA. So let me go to the actual live and see here. So similar to Broadcom, the target areas that we had for NVIDIA, this was the break that we had identified on the 4-hour. It pulled right back up to the source of that. That's a very classic market maker move that we see. Fake down and then push back up to entice buyers to get back in before you really pull the plug and fall. So we came down to this areas. This was a perfect feel of this zone here. And now NVIDIA is pushing its way back up. But the key thing, as I just mentioned right now, what's important is this daily demand zone, which is, let's just talk the top of it. The top of it is right at 200. So today's candle, this push up is great. It's exciting for the chips and other AI projects or other AI assets, but we need to have this daily candle close. So this candle has an hour and a half before it will close, but we also have to consider the post market as well. But this candle needs to close above here. If we do that, then we can negate again this daily break of structure right now. If that does not happen and we fail to close back above here, NVIDIA is in a much bigger trouble. And I'm going to zoom out to say where the other potential areas are. And these are the other target areas that if we cannot hold this zone. There's a large fair value gap down around 180. And then the demand source of all of this, the source that said once I was originally broken here, where I'm ideally targeting, is down here to just say 170 to 175 range. So that's the outlook for NVIDIA. That's what we really need to be careful and to look out for. There's one last one I'm going to try to squeeze in before I end this one. I want to go take a look at, let me go to the live chart. I want to go look at Eli Lilly because I've done a couple of posts on Eli Lilly lately. This one kind of came on our radar because of some other groups that I'm in. There's some options traders and things, and we've just taken a look at what's going on with Eli Lilly. So let me dive into this one. I want to go to, this is the daily look. I'm going to go down to the 4-hour. Well, actually, let me go to the hourly because this is where I first started to see something is a little quirky with Eli Lilly. It started flashing some signs of concern, I would say, back here on the hourly. And so here we had an hourly break of structure. So I'm going to zoom out to say, where did all of this come from? So we've had a pretty big push from the maybe middle of June, when Eli Lilly was sitting around 1080, 1090. So this push from 1090 all the way up to highs up in here, this 1200, that's a pretty significant push. I mean, that's almost a 20% push up on a major NASDAQ asset. And so, excuse me, this is on the stock exchange, but whatever, major asset. What is a concern was once we see that big push like that, what drew my eye was this daily breakup structure here. Hourly breakup structure. So once we had this hourly breakup structure, again, what I always expect to see, I found the source of that. If the market pushes back up into this source but fails to reclaim it, fails to close back above it, that's a pretty big signal that something else is going on. That the larger market makers, large asset holders of Eli Lilly are saying, yes, we're ready to push this up, but institutions are saying it's overextended right now. Long term may be good, but we need a healthy pullback. So that was the first signal back here. So we've been following this since then, and if you'll see a couple of times, numerous times, the market has pushed back into this. This was once, it pushed back into it again, and every one of these times it got rejected. Here on yesterday, it made a huge push back up, made a new all-time high. That's great. All-time highs are great, but these candles mean nothing if they don't close. So it pushed back up to near 1250, ended up closing back down here in this area. But you'll notice not one of these candles, we've not even gotten an hourly candle to close back above this 1238. And so until that happens, the outlook is still short. Now, not long-term short, it just means rebalance short. And so the target areas for this one, with this kind of structural break, the target becomes, let me zoom this up so we can see it. The target becomes the H1 demand source. That's around 1115. So back down to this area. This demand zone for the 4 hour is around 1130, and the demand source down to 1115. So is Eli Lilly gonna fall to here? I'd say it's 80% likely that we're falling back down to this area. And the only thing that's going to negate that is going to be a close back above here. And because we've had this activity on the hourly and the 4 hour, then we need to see a 4 hour candle close. Now I'm looking at the 4 hour. And so note even more importantly, so we zoom out, come up to the 4 hour, but notice how the 4 hour itself has tried several times to push back up here. Up, fail, up, fail, up, fail, numerous times. Every time, not only did the market fail to close above here, it was a pretty significant rejection. And now we've pushed down into this area. We did make a new demand zone. So this new 4 hour demand zone could be the place where the market is saying, look, I'm going to restabilize and balance here. So that could keep us also from falling all the way down here, but it's just, it's too much of a resistance up at this top area. And every time we've gotten here, the bears have slapped it back down. So I'm still looking for Eli Lilly to push down to these areas. And as I said, the only thing that would keep it from doing that, close back above, or if we get into this, I'll leave it with this, if we get down into this 4 hour demand zone, because it's 4 hours, so the 4 hour structure is going to override the hourly. If this 4 hour structure comes in here and we consolidate and build some momentum, build volume in this area, then we could consolidate enough to come back and close above this. So that's the outlook on Eli Lilly. So if you're doing whether it's shorts or options, whichever way you choose to trade those, we primarily do these through CFDs on the Forex market or CFD market. That's the primary area of where we trade. But if you're doing options, that's great. The options chains are always tricky here. And in my opinion, why a lot of this bouncing up and down is going on is because, the market is trying to shake out options. So we prefer to trade on CFD, so you have no concern with theta, no concern with the time decay on these. It's just a short. I have shorts. My stop loss is above this previous high here, 1250, 1255, something like that. And the targets, first target is somewhere around 1200, which the market came very close today to hitting one of our targets. I think it was like at 1205, and the market just did not, it came like to the penny, close to it, but didn't trigger. And the next target is going to be down in this area. Okay. All right. So hope this helped, guys. I appreciate you taking a look at this one. If you like anything that we've shown you today, please like and subscribe to our channel. As I mentioned, also check us out on TradingView here at Akeelah Traders. We love to get your comments on here. You can see a lot of other analyses that we posted on here. And more importantly, join us on some of our live trading. We have live trading classes. We're starting to do these on Tuesdays. So Tuesdays at 7 p.m. Eastern time. We love to have you join us on our trading channel. You can go to our site to tradingacademy.akeelah.io, and you can sign up for free. It's a Zoom class that'll be held, a 90-minute class, just to kind of give you an idea of how we read the markets and to show you how to look at things in a different way. And so please hit that like button, subscribe to our channel, and I'll look to see you next time. Thanks.
I've been trained in the fire, I was built for the pressure. Every scar, every hit only made me better.